Hey everybody, Mo Rahim here. This is Mary Jane Markets, and today we've got a few topics to catch up on. This episode was meant to come out yesterday, but some unexpected things came up for me last night. So today we're going to be talking about some general market topics, both at macro and industry specific, as well as the whirlwind of events around the Illinois lottery, and a couple of other things as well. First, let's take a look at stock prices. This view is over the last couple of days, and again, there's not a whole lot of outsized movement. The broader market overall has also been quiet, with the S&P up about only 0.5% the last 2 days as of this recording. But like I've been mentioning, with earnings coming out in August, things aren't likely to stay like this for long. Quick macro news: the Fed held its July FOMC meeting this week, and at the presser yesterday, Fed Chair Jerome Powell said there aren't any changes to their policies, both keeping their interest rates near zero and maintaining their asset purchases program. Their statements haven't changed much over the last few months. They're still watching data come in and want employment numbers and labor force participation rate to come up further before they start tapering. I think that's been well established at this point, and that's just going to take time. There's not going to be any sudden movements in that on a timeline of just months. The other hot topic lately, as you're probably aware if you're tuned into the financial news often, has been around inflation. A bit of background: the Fed is targeting an average inflation rate of 2%, and with inflation lagging behind that target for the last decade, they are prepared to let it run a little higher until that goal of an average is achieved. So, in combination of those two things, I'd expect the current policy stance to stick around for a while, which is accommodative for the stock market. While I have a degree in economics, this isn't an economics podcast, so I'll keep this topic to that update. Staying on the theme of general market topics, there was a nice check-in article on sales coming from MJ Biz Daily's Bart Shaneman. This came out on the 27th, highlighting the growing legal market, and I especially like these year-over-year charts at the beginning here. His sources for these figures were the state programs as well as data analytics firm Headset. This type of stuff is really visually satisfying for us to see as investors. As you can see from the title here, adult sales soften but up year over year. Bart's story here is exploring if this is concerning. I don't think it is. Nothing is ever a solid straight line up. If we take a big picture view of this, it's super clear that the market is growing, and I think these charts, some of which go back to 2014, clearly demonstrate that. So the kinks we're seeing here, I'm not concerned about. So maybe focusing in on those is just journalistic style to make his article flow. I'll link it below if you want to read it. He interviewed a few managers at smaller firms, and the article is pretty positive despite the title. A couple of things I wanted to point out here. I'll start with the last topic on inflation, something we just touched upon. He talks about inflation here briefly at the end and how it doesn't appear to be affecting the industry, which I think makes sense. So let's break this down. What is inflation? Inflation is a change in purchasing power. So with inflation on the rise in a post-COVID economy, it is changing our purchasing power. It takes more money to buy the same amount of something. He lists some typical things here like gasoline, cars, food, or eating out at restaurants. And Brad is reporting this. This is not the case for cannabis. He cites Headset here, who say median marijuana product prices haven't climbed higher than where they were a year ago, a strong indicator that inflation isn't impacting the industry today. This makes sense if you think about it. Think about what you paid 5 years ago and what you paid today. Has that number gone up, stayed the same, or gone down? I'm willing to bet that for most people it's gone down. I have to credit Brad, for how spot on he is with this, saying that the cannabis industry is not a traditional mature industry. This is exactly what I was talking about in my very first episode. This market, with one step in the illicit world and one step in the legal world, doesn't behave like an efficient market. Like I've mentioned before, I do think cannabis flower is a commodity, despite everyone's best efforts to steer that wheel in the opposite direction. I have promised an in-depth episode on what that means, and I want to make that as I get better at this whole podcast thing. I understand that the audio is bad, and I do apologize for that. I'm getting a better mic, and hopefully I fix the issue of audio not coming out of both earbuds. But aside from all my technical issues, I think articles like these are super important to read. They talk about sales, they talk about prices, and all of that has a direct impact on cannabis companies and profitability, and in turn has an impact on stock prices and us as investors. All right, one more market topic if you'll stick with me. This is an article which appeared in Benzinga from the CEO of Global Go Analytics. Sorry about that, had the wrong tab pulled up. Anyway, like I was saying, this is an article which appeared in Benzinga from the CEO of Global Go Analytics, Tom Adams, and is titled Cannabis Law and Markets: How Taxes and Regulations Impact Sales. The source of this information is a 400-page report from the same research and consulting firm, Global Go Analytics. I tried to find this report, but it is $550, so something I don't have access to. But if you do and are in a sharing mood, I would appreciate it. But we can go over the interesting tidbits of information in this article. First off, right off the bat, Adam pegs the worldwide market to be $200 billion. Hard to tell which market he's referring to, if it's just the illicit or if it's the total market here. But I do agree with his first statement here that growth is inevitable in legal cannabis markets. You can watch the first episode on how I derive just the US market, since that's the one I'm familiar with and focused on. But I gauge that to be around $150 billion right now. In this article, he compares and contrasts the cannabis programs across 4 states, and I imagine that they do this more granularly in the report, those 4 states being Colorado, Washington, Oregon, and California. And they look at 3 sets of figures, at least in the article here: stores per capita, effective tax rate, and spending per capita. And without reading the whole article, we can get a sense of what it's saying and what the report's saying just by looking at this table here. As investors, we want the spending per capita to be high, and they list just 2 metrics here we can look at to view their effect on spending. I personally think there are more than just these 2 factors, stores and tax rate, but just looking at the sales data as a function of these 2 is illustrative that markets and humans react to these kind of things, and economics isn't voodoo. Maybe in the report they do a wider comparison. But in this table, if we look first at just the stores per capita relationship with spending, I don't really see a correlation here. Just looking at the extremes here with Oregon at 5,620 stores per capita and California at 54,611 stores per capita, kind of seems like the more stores there are, the lower per capita spending is, but that doesn't really hold up if you kind of do a more apples to apples comparison between Oregon and Colorado and Washington, both around 13,000 stores per capita, and spending being totally different at $303 and $184 between the 2. So availability alone, or another way of looking at it, is a plethora of supply doesn't seem to directly affect spending or demand. But if we start looking at tax rate, we see a stronger relationship. Here it seems, and I hope this is consistent with your internal understanding of markets, that the higher the tax rate, the lower the spending is. A pretty direct example here again is between Colorado and Washington, with a similar number of stores per capita and very different tax rates here, produces very different spending behavior. So to state that explicitly, A lower tax rate here seems to be correlated with a higher spending in the legal market, and a higher tax rate seems to be correlated with lower spending through the legal market. But again, tax rates don't perfectly explain it. Washington's tax rate here is higher than California's, yet their spending is also higher. So just these two factors don't fully explain consumer behavior, but we can see how they influence it. Comparing the two factors, tax rates seem to be a bigger influence than stores. But if you think about the footprint of the illicit market, I don't think availability or access to cannabis is an issue. So this is all interesting and maybe common sense to you, but we can use data like this to assess, for example, the newly introduced Cannabis Administration and Opportunity Act. All right, hopping around here to find my tax schedule. Now, this is from the CAOA detailed summary that the Democrats in the Senate released. I've shared this out before, but I'll link it below again. On page 18 is a tax schedule here with the top tax rate going from 10% following enactment to 25% in year 4, and then in year 5 and beyond it goes to a rate based on quantity or milligrams sold. So we can deduce what kind of effect this tax schedule would have on consumer behavior. The reminder, this bill is still open for comments. Okay, last topic for today is the whirlwind of events in the past 48 hours in Illinois. Today was supposed to be the day where the first of 3 lotteries in the state would be conducted, and 55 of the 185 licenses up for grabs would be awarded. We talked in an earlier episode on how a lawsuit was filed against the state claiming they unfairly changed the determination rules for the certain... Sorry about that, somebody was at my door. So, like I was saying, we talked in an earlier episode on how a lawsuit was filed against the state claiming they unfairly changed the determination rules for certain licenses. On Tuesday, we got word that that lawsuit had been dropped, which would have paved the way for the lottery today. And then on Wednesday, we got an update from Toy Hutchinson, the governor's chief advisor on cannabis, about the ludicrous amount of interest in these licenses, with 626 applicants qualifying for the lottery today from a pool of 900. So that's 626 businesses chasing the 55 licenses that were up for grabs at today's lottery, and that created a buzz. And then, just hours ago, news broke of a judge in Cook County, that's the county for the state of Chicago, ordered that the licenses couldn't be awarded until he comes to a determination on a lawsuit filed by 2 parties, again on the scoring system, but that the lottery could still continue. As I'm recording this, I haven't seen an update or any remarks from the governor's office, but I will keep you updated on the situation. So, another disappointing stall in the Illinois market, and we might have to wait a little bit for this one because the next hearing is scheduled for August 9th. But like I mentioned before, I'll keep you updated on this topic. Illinois is my home state, so I'm following it closely. One more quick thing. It looks like Truliev's Instagram account has been shut down by Instagram/Facebook, probably for promoting cannabis use, so not directly market related or something that would financially impact the company per se, but important to keep on your radar as we assess things like acceptability and sentiment on the topic by the general public. So this was something I wanted to put on your radar. I know sometimes these search and social media algorithms can sometimes create a echo chamber. It's important to remember that there are people on the other side of the issue on this, and that we're in this transitory period here. It's something that's on my mind as I start this channel. I'm not sure if YouTube will ever allow me to monetize my channel, even though it's investing focused and not consumption focused. That's why I have a Patreon page. If you're finding my content useful, please consider visiting that at patreon.com/MaryJaneMarkets. If you want to get in touch, the best place to do that is on Twitter at MJMarkets. And that's it for today. Thank you.